Hello, everyone, and thank you for taking the opportunity to come learn about what I think is probably the lowest hanging fruit, one of them in the Inflation Reduction Act and in all of sustainability is kind of looking at how do you get more energy efficient. You know, some of these renewable energy ideas are wonderful and certainly make a lot of sense to do, but it starts with how do you figure out how to accomplish what you're trying to accomplish using less energy is often the first question that I like to ask. So we have exciting panel today of kind of going through section 179D, which is the energy efficient commercial buildings deduction, kind of talking through some how to qualify for that and what projects are good fits for it. So if you're inclined, you may introduce yourself in the chat. And a question that I always like to ask, if anybody's willing to share, is something that you're grateful for. I love to start with gratitude. And then specifically, if you have anything that you'd like to learn or share today in the meeting, any specific questions, we are planning for some Q&A at the end of this. So if you put questions in, we can start to look for those. We're planning for about an hour today, including the Q&A. Would ask, for etiquette that you remain on mute unless you're asking a question. And the webinar is being recorded, and we will send out a copy of these slides and the webinar to the registered attendees afterwards. So there's an opportunity to have those, and certainly we'd love to have any conversations that come after it as well. So as an outline, we'll start with some introductions of our speakers here today, and then today's all about section 179D. We'll go through the history of the legislation and the recent changes. Go through what qualifies and who the types of clients that can qualify are, have some energy modeling and what's the certification process, and then also some of the documentation requirements that go through, kind of walk you through that whole process and then get into questions and answers. So with that, we'll get started. And if Randy, if you'd like to introduce yourself to the group, would love that.
Yes, thank you, Caleb. Good afternoon, good morning, good evening. For those of you watching this on replay later, hope everybody's doing well today. And I'm Randy Lucas. I am CEO and founder of Lucas Tax and Energy Consulting. This is a important topic for our practice. It was actually what launched Lucas Tax and Energy, this code section. And we've been in business since 2009. Prior to that, I was with Price Waterhouse and Deloitte. But you can see some of my areas of focus there. We focus on clean energy and energy efficiency incentives. Work on grants, and we're kind of a think tank, knowledgepreneur shop to help companies of all sizes and a wide range of, we have a wide, diverse client base to understand these incentives and credits. And I've been working with the two distinguished panelists here, my co-presenters, for a number of years now. And it's just been really great to work with them. And I want to thank Caleb for the idea of having us this afternoon, this webinar, and bringing everybody together. So thank you so much, Caleb, and I'll pass it on to Billy. Yeah.
Well, thank you, Randy, and thank you, Caleb, and thank you for everyone that's on the call today. I see some familiar names, Jeff and Hunter and David. Glad y'all can join today. Some of the other names look familiar as well. It's been a while to some of you guys. I'm the principal of Shultz Engineering Group in Charlotte, North Carolina. I've been with Shultz since 2007. And amazingly, it's hard to believe, but been working in this industry for 35 years now. I don't feel that old, but that's the numbers don't lie. Professionally licensed in 39 states. Got to add Hawaii to the list very recently. Got a small project in Hawaii. Hope to have a lot of construction administration on that one. Then also I'm currently the Vice President of the international organization ASHRAE. And in 2023 was awarded the distinguished honor of ASHRAE Fellow. Also, I am a member of ASHRAE, obviously, and a member of these other very pertinent organizations: ASP, ASPE, ASME, NFPA, USGBC, and Mensa. So I look forward to talking to you today, and I also look forward to the questions at the end.
Thank you, Billy. And I am Caleb Quaid. I'm the founder and president of Regenerative Shift. We're a holistic environmental consulting firm based out of Tampa, Florida. It's been in business for 2.5 years. And since the Inflation Reduction Act passed in 2022, can't be a holistic environmental consultant without understanding how to help businesses get these tax credits and tax incentives. So really have dived a lot more deeply into that, and have worked on some Department of Energy funding, some commercial solar project, energy efficiency and decarbonization projects. So relatively new compared to Billy and Randy in this space, but quickly learning and helping to develop the right partnerships to help clients out in that way. I also am on several regional committees with the Tampa Bay Regional Planning Council for Land Use and Development and Clean Energy. I work, a lot of what I do in my core business is nature-based, so really passionate about the Florida Wildlife Corridor and how we can build developments and communities in a way that's friendly to the life that's around there. And in my past life before this, I spent 10 seasons with the Tampa Bay Buccaneers, a couple seasons with the Miami Dolphins before that, doing capital projects, operations. That was where I met Billy when we were working on some big stadium renovation projects out at the Tampa Bay Buccaneers. So really excited to have a chance to talk to everybody today. I'm going to start off with a little bit of an overview, kind of high level on Section 179D, and then turn it over to Billy and Randy as we get into more of their specialties as it relates to it. So Section 179D is the energy efficient commercial buildings deduction. And generally speaking, it's a federal tax deduction for energy efficiency relative to the applicable ASHRAE energy code. And you need to be, as it is in its current iteration, you need to be at least 25% more efficient as a building than the applicable version of ASHRAE 90.1 that you are being compared to, and 50% more efficient to qualify for the maximum efficiency deduction. And we'll get into all this a lot later. This is kind of just a quick overview to answer questions that you might have at a basic level. And it applies to both new construction and energy efficiency related renovations to buildings. This is a commercial building deduction. It applies to commercial buildings, certainly manufacturing, industrial warehouses. It also applies to hotels. One that's really interesting that I think is really underutilized is parking garages. Parking garages, in particular, in the next couple of years, because the primary energy efficiency related thing in a parking garage is going to be its lighting, and the code that it's being compared to versus what it probably is being built to today really creates an opportunity for any parking garage, to potentially qualify for a maximum benefit here. And then also, even though it's residential, technically, multifamily housing that's 4 stories or above can also qualify for this. There are other deductions under the IRA available that we're not talking about today for 3 stories and below multifamily housing as well. This deduction was originally enacted as part of the 2005 Energy Policy Act. So it's been around for a long time. This isn't a new deduction. It's been modified over the years and most recently had a great enhancement with the Inflation Reduction Act today. And that's a big reason why what we're going to be talking about today with you. So I kind of try to summarize this the best that I can. There's 4 real key modifications under the Inflation Reduction Act that changed it from how it was previously. One is it almost tripled the benefit. So it went from a $1.80 max per square foot deduction in the past to now $5 as a baseline deduction, and that is subject to an annual inflation adjustment. So with inflation as high as it is these days, that actually is pretty significant. The 2003 projects qualify for $5.36 a square foot if they meet that 50% threshold. And in 2024, this just got announced last week. but it's up to 565. So as time goes on and you're doing these projects, it's one of the benefits of inflation is that this deduction gets a little more bigger as probably a lot of other things also unfortunately get bigger. So the second thing that was a big change to this program is it expanded who was eligible for this deduction. So it had always been available to commercial building projects. And then I think since 2008, it had been available to designers of government projects. So those are, you may be familiar with that depending on how familiar you are with 179D. But in 2022 and now presently, they really changed the rules as it relates to real estate investment trusts. If you're in that market or understand that type of building, it's typically huge amounts of property that are huge amounts of square footage that are tied up in these large real estate investment trusts. But they have some quirky tax rules associated with them. Well, now they changed that. So these the owners of these real estate investment trusts, it's much easier to use this deduction. So, really significant probably savings for that segment of people. And then the one that applies more broadly, they open it up to the designers of projects for not-for-profits and tax-exempt entities. So churches and places of worship, not-for-profit hospitals, universities and colleges, other NPOs, charities. These are non-tax paying entities. So a tax deduction isn't beneficial to them directly, but and Randy's going to talk more about this later, but there's an opportunity for these entities to allocate this credit to designers, and that's a pretty broadly used term. But the designers of these projects can potentially benefit from these, which if you structure your agreements right with these designers, obviously if they're getting a big financial incentive from working with you, that can translate to potentially saving you some money or building that relationship over time. So really kind of a nuance, but really big benefit for a lot of projects that this now falls into. Another big change was it used to be in the past, you could get this deduction once. You could get your $1.80 a square foot, and that was it for the building. Well, the IRA wants to focus on continued improvements and continuing to work to be more energy efficient as technologies improve. So now for taxable entities, you can get this once every 3 years. And for the exempt entities, you can get it once every 4 years. They've made a little bit of a distinction there, but still something that you can get over and over again as you continue to do these projects to get more energy efficient. And then the fourth one, and this makes it in some cases a little harder to qualify, but has some benefits to the overall economy, added a requirement that projects must meet prevailing wage and apprenticeship requirements to reach these maximum incentives. And Randy's going to talk about that a little bit more later, but something that is really important to note as you're planning these projects and working with contractors. You want to make sure they are meeting and documenting these requirements. So this kind of serves as the roadmap that we're going to walk you through for the rest of the presentation. Kind of 3 buckets of things that you need to do. You need to qualify for it. They need to, kind of go through an evaluation to figure out what you qualify exactly, and then you need to document things. So kind of walk you through very quickly here. There's two columns here. One's for a commercial building owner, and then one is for the designer of these other tax exempt properties. So you kind of can look at as it relates to your project. But to qualify for this project, you need to have an eligible energy efficient commercial building project, which can be new construction or renovation. Randy is going to talk through the types of energy efficiency projects that fall to that to give that, but can certainly have probably more depth as whether your project qualifies or not, can have some conversations offline. And then for maximum deduction, you want to make sure that you're qualifying for these prevailing wage and apprenticeship requirements, like I mentioned. As a designer, you need to be the designer of some portion of the technical specifications of one of these eligible projects. And that could be an architect, an engineer, some contractors, depending on how you're writing the contract, can apply as design assist or design build. And then one that's really interesting for mechanical controls, a lot of these projects, if you're the designer of the HVAC sequence of controls, that can potentially qualify as an eligible designer under this as well. As evaluating it, this does have a little bit of a work that goes into it. This isn't just something that you can do on your own. You need to have a qualified independent engineering firm that performs energy modeling and then comes out and has a third-party visit that certifies that what they say is in this energy model is actually what's installed. So that's a lot of work that Billy does, and he'll talk through that as he gets into what that process is. But this is something where you do have somebody that's non-affiliated with the project and independent that is qualified come in and do these calculations to figure out where you fall versus this ASHRAE baseline. And then on the documentation side of things, you need to have a little bit of paperwork to confirm that you own the property if you're the commercial building owner. And then you need to have the certification and energy model that this independent energy firm has provided. And then for the prevailing wage, you need to have your contractor and yourself maintain the documentation that shows the prevailing wage side of things. The only difference on the designer side of things is you need to have an allocation letter from the property owner that says they are specifically allocating this deduction to you based on your design services and involvement in this project. So same kind of category, but it's a different letter because you were not the property owner, they are assigning it to you. So that's kind of the overview, and that will guide most of what we're talking about the rest of it today. I'm going to turn it over to Randy now to talk through more specifics on what qualifies.
Yeah, thank you, Caleb. That was a great overview. And one of the things about 179D that's so interesting, I'm kind of fond of the deduction because it is very quirky, and it's unlike anything else in the tax code. And I don't want to get too tax nerdy, on this presentation, but 179D is unique. It is something that's based it's based on the energy efficiency, which we talked about just a second ago, and then the idea that you could be a designer of a building, and as Caleb really did outline this very well. If you're working with an exempt organization, if you're working with a government-owned building, municipality, college, university, K through 12. You could go in and design for them the energy efficiency, and as an incentive to do that, they can't take the deduction because they're tax exempt, but they can allocate it to the designer or designers of the energy efficiency. And this can be significant for a lot of businesses. If you're in the lighting business or HVAC business and you do a lot of contract work, we encourage you to go back and look, and maybe you may have had some projects that you could qualify, because this is kind of a reward in a sense, because the government, and I get this question all the time, why did the government open that up to allow this allocation of this deduction? And going back to what I was saying earlier, there's really no other deduction that does this, that allows you to move this over to someone else. But the government found this was the solution. Congress authorized it, but it was proposed that they wanted to walk the walk. They are asking the private sector to make their buildings more energy efficient. The government and their state at all levels will put a lot of investment in real estate and commercial buildings, and they wanted to do the same thing. So it's a really good opportunity. And then now a new market, if you will, with the Inflation Reduction Act opened up to allow your other nonprofits, because we would get that question a lot as well. We have some companies that did a lot with K through 12 and then do a lot with private schools or private universities. And we would tell them, unfortunately, we can't allow you to take this deduction. You can take the ones over here in the private, in the government-owned buildings, but these private buildings, you can't do this. And now that's opened up. So there's some new markets that are opening up this year with hospitals that maybe not-for-profit hospitals, private colleges, universities, religious institutions, and we talked earlier in the previous slide your tribal communities. Again, a number of different buildings that you can take a look at. But in all buildings, whether you're on the for-profit or the exempt entity, exempt organization side, when we look at 179D, we look at these three components that you're looking at on the screen. We focus on the interior lighting, the mechanical system, which is the HVAC and the hot water system, and the building envelope. And that could, in fact, include the insulation of the building. It also factors in the windows and the window seals, or tinting on the windows, and also involves the roof and the R value of the roof coating of the roof. And that is all factored into this energy efficiency. I want to keep in mind that we look at all building types of all different sizes and structures and industries, but we do look at these three components, and we also eliminate. And Billy will talk more about this. I'm so glad he's here because we talk about the modeling. But in all three, or in all buildings that we do the certification of the energy efficiency, we do take out the non-building related energy use. So we only look at the core building. We remove, if you will, the plug load. So if you have heavy equipment, or you're a restaurant, you've got kitchens and refrigeration going on at all times. You're a hotel, you've got constant people coming in and out of the hotel that may impact the air quality and air conditioning. We strip a lot of that out. So we are only focused on the key areas of what qualifies. But one distinction here is that we used to look at these three items independently, or for a partial deduction, and the Inflation Reduction Act has modified to remove the partial deduction, and they want a focus on all on the building holistically. And so we do look at this, and then we'll show some case studies at the end. But we do look at, even if we are asked to look at an existing building that has been upgraded or renovated, and they only did lighting, or they only did an HVAC system upgrade, when we come in to evaluate now under the new rules in 2023 and beyond, we do have to encompass all these areas, and see what the energy efficiency result brings. Next slide. And so I wanted to take a moment to also talk about something new in the modifications from the Inflation Reduction Act, and that's the concept of the prevailing wage and apprenticeship requirements. In the Inflation Reduction Act, consistently throughout all of the incentives that the federal government has offered in terms of the credits that are available, consistently they have required that if you are going to claim these credits or these deductions, you do need to meet certain labor requirements as it pertains to this work. And the 179D deduction is included in that required list of incentives that must meet certain labor requirements. It is directly tied to the benefit. And so as you see on the list here, there's a base deduction, and then there is a elevated deduction, but the difference is steep, and it is an 80% difference between what's possible and what's if you do meet these two areas, prevailing wage and apprenticeship. So really quickly, prevailing wage just means that in the county of the location where you're doing your work, the laborers who are working on site need to be paid at or above the wage for that particular county. You find that information on there's sam.gov where you can go and you can pull the labor wage reports for the particular county in the state which you're operating in, and that'll let you know that laborers are on-site laborers, generalists, are paid X amount, and they probably have a fringe benefit amount associated with that as well. And so in our reports for 2023, we are documenting that this has been met, and we do look up the wage. Keep in mind, it does say non-supervisor. So this is any of the frontline workers doing the work, and that can include either in new construction on the construction side or on a renovation. If you're just doing, say, like a lighting upgrade, or you're replacing the chiller, those frontline laborers have to be paid at a certain wage. We do monitor that. Same thing for the apprentice. Again, this is designed to encourage more investment in clean energy, but also investment in creating new jobs and new opportunities, job creation. So there is an apprenticeship requirement that is included on these as well. And you do need to meet both of those for your project. And but there are some exceptions and some exemptions for prevailing wage and the apprenticeship. One is that you can document that you made a good faith effort to reach out to an apprentice agency and there's just no apprentices available. Or again, you may have a situation where you don't have you have a smaller group of laborers. It's a 4-to-1 ratio. So if you only had 3 workers on a site on a project, you would need to you would be exempt from that for the apprenticeship. You would still need to meet the prevailing wage requirements, and those are pretty set forward. And again, that's based on county by county. So they do take into account different counties, different parts of the country. But this is a requirement that's found not only in 179D, but it's found in solar, it's found in energy storage, the EV manufacturing, battery. So it's in a number of places where you would have to account for this and document it. And we, accordingly in 2023, to not have that 80% drop, we do add these to our reports. Next slide.
This is going over to Billy.
Yeah. So thank you, Randy. So I'm going to go over just some of the aspects of what we do from an engineering standpoint, energy modeling standpoint. So energy efficiency requirements. So as you can see in the columns, you've got groupings of years where you've got different standards and different deduction amounts depending upon the age range, the year range that the energy efficiency initiatives were incorporated. So, like as Caleb referred to, you can have a new building, and in the new building, all the aspects of the new building are considered. Or you could have an existing building where you are incorporating energy efficiency initiatives such as, replacing fluorescents with LEDs, or installing high efficiency air conditioning equipment, or improving the envelope with new glass, new roof, new insulation, and so forth. So you can see the groupings of years, and then we have ASHRAE Standard 90.1 describes the baseline for that year. So it's very involved. In 90.1, all of the versions of 90.1, in the back there's an appendix G, and that appendix prescribes in great detail, what constitutes the baseline building as far as lights, HVAC, envelope, strategies, control strategies, ventilation, all the things that go into design and construction of the building. They're intricately described in those documents. And as you can see, until 2026, the baseline is 9.1 2007. It might be understood, but just to make sure it's understood, as you go into as the baseline year increases from 2007 to 2019, the baseline itself becomes a more energy efficient building. So until 2027, we can stay back on that. Yeah, there you go. Until 2027, we have a baseline that's very advantageous for us to look at these energy efficiency scenarios and have a really good comparison that gives us the ability to achieve these energy reductions compared to the baseline, and also achieve these deduction amounts. So if you're looking at incorporating an energy efficiency project or building a building and are considering the 179D, please consider what happens in 2027. Okay, so we can go to the next slide. So as I said, the baseline that's described in ASHRAE 90.1 Appendix G, it's it has a lot of different variables in it. This is a snapshot. This is not across the board applicable for all projects, but this is a snapshot. This would be for a metal building that is constructed in, say, a southeast climate zone, and with air conditioning that perhaps is package units of a size in the range of 5 to 10 tons. And the reason I'm describing that is that's a very common, building. And so this is just to illustrate what happens as we go from 2007 to 2019 baseline that I described in the previous slide, what that does for you, and why there really is an incentive before 2027 to go after these energy efficiency 179Ds. So in 2019, for that building I described, the energy efficiency baseline will, as far as the R values of the roof and the walls and so forth, they will, the baseline will have a 25% more efficient insulation values and glass values and so forth in the building envelope. In that size range, package unit, so forth, the baseline doesn't change for air conditioning, as far as efficiency of air conditioning equipment. Now, there's a lot of variables to that. There could be very well changes to the baseline depending upon what kind of system is being considered. A chilled water plant, hot water plant, all these other things, chilled beams, things like that. There are incentives that do come into play that do impact this, but just from the standpoint of this call today, just want to make sure that give you a feel for it. As far as lighting, the lighting baseline will go up 56% for like an office building, for example. An office building, your baseline is going to be 56% more efficient, which definitely would be a great impact when you look at lighting scenarios beyond 2027. And so, the baseline assumes LEDs versus the 2019 assumes the baseline is LEDs, whereas the 2007 assumes the baseline is fluorescent. And hence, that's why you see the 56% more efficient baseline. We go to the next one. Okay, so energy modeling. Just want to give you just a high level of what we do in an energy model. There's various programs that are accepted by the government. Some of them you may have heard of. There's TRACE, HAP, Energy Plus, DO2, and several others. And they are accepted by the federal government as they want to see output from one of these accepted programs. I personally use TRACE and some HAP in our energy modeling. And so to create a model, what we do is we impact all aspects of the building that affect energy, and that could be insulation values, glass performance, lighting, HVAC, internal equipment, occupancy schedules, control strategies. We put in all the dimensions of the building. So we put in, the roof area, the wall area, the window area that's in the walls, skylight area, things like that. Get all of those aspects into the model, and that's for the proposed building and the proposed energy efficiency scenarios. And then what we do is we copy that model, those model inputs, over to a second energy model, and we change it to incorporate just the 90.1 baseline aspects that are described in Appendix G of 90.1, be it 2007 or 2019. So then we got two buildings. Then we've got the building as proposed with its energy efficiency upgrades, and then we have the baseline building, which is what you're comparing it to. And we run both models, and we compare the output efficiencies. And if the proposed building and its energy efficiency initiatives are 25% better than the baseline, then we're in. We've got qualification, and we've got deductions that are forthcoming. And then we can go up to the maximum incentive, and it's a sliding scale of 50% better than baseline, as was described earlier. And then another requirement is that I or another engineer from my office, not associated with the design of the project, will visit the site and verify that those parameters were actually installed in the project. So if I'm modeling a certain type of lighting or HVAC or water heating or building envelope, I will go to the site, look at it, make sure that what I modeled is indeed what is on site, and then I write a certification letter that states that yes, indeed, what we used in the energy model was incorporated in the building. So that's a high level of what we do from an engineering standpoint, and we'll look forward to your questions, and I'll turn it back over to Randy.
Thank you, Billy. So I was going to spend a few minutes just talking through the mechanics of how we actually claim the deduction. And this is very important as well, because one of the things, again, that's unique about 179D is that we can go in, identify, we have a building, then, as Billy just explained, can evaluate the building for the energy efficiency, discover that we do have indeed a deduction that we can claim. And then it's how do you make that happen? And one of the things I have to often explain is that 179D, even though it's dealing with energy and energy efficiency, is very, very unique in itself, that you have to claim this on the tax return to see the benefit. In other words, the government is not going to cut you a check, even if you're an exempt entity, you're the designer. You've got to get it on the tax return. And so to do that, what we do is we claim the deduction in the year the project is placed in service, or the year, let's say the building's already in service, but you're doing a major renovation. We do it in that tax year. It is possible that if you miss the deduction, it is voluntarily. It's not something that's automatically done. You can go back and look at something maybe in 2020, 2021 that you haven't claimed. But you have to keep in mind that you would have to look at it under the pre-investment tax credit, Inflation Reduction Act standards. And therefore the maximum may be the $1.80 incentive, but we pretty much use the same approach as we outlined here before. And then also we would document that the prevailing wage and the apprenticeship has been met. We'd have some information about the building and our findings and our calculations. But really key critical, as Billy mentioned this letter, this is a redacted version of a letter we used in a project. where we do talk about it. And there are some key elements that the IRS does prescribe, where you have to include talk about what you used, how how it was done, and the energy change in the energy efficiency, and then certify that you did do the site inspection. So this is, we refer to this in our shop as the magic ticket, because 179D really kind of self-polices itself when you have an engineer, independent engineer validate this, and then also do the site inspection to validate that that equipment is in place, and then also write this report and stamp it. This is not something that's available unless you have those credentials to provide that. So as a CPA, I cannot sign this letter. I have to work with Billy and his team to get this letter, this certification signed. But this is the key element to go onto the tax return. 172 other quick things about how you claim it. 179D is not to be included with your depreciation claims or your depreciation expense. You do claim this separately. There is a form for it now that's being introduced in 2023. It's Form 7205. And you do list out where the project's located. However, you still include this in other deductions if you're claiming it on the tax return. And we work with our clients and help them and their tax preparers, whether they do that in-house or they work with a CPA firm. We help them with those numbers and make sure it gets on the tax return, because that's a key critical part to make sure you get this benefit in your business, to make sure it gets on the tax return. Next slide. Okay, so I could go through and Billy, I'll ask you to kind of color commentate on some of these as well. But these are some examples of projects that we've gone through and done the energy modeling. These are real live. We kind of redacted the names, but so you can see this apartment was done, placed in service in 2023, new construction. Excuse me, 231,764 square feet. We did a complete model. This developer has a focus on sustainability, so it was great to see the energy model kind of validate that effort. And when we did the modeling, as Billy mentioned, we put in all the components, floor by floor, and that was modeled, and then it compared it to the ASHRAE standard, and the subject property is 50% better than if you'd have built this to specs under ASHRAE, more efficient. So that entitled them to the $5.36 because it's adjusted for inflation. And so that is the deduction. This is a deduction now. That's not the actual cash value of the deduction or what it means to them in cash, but they were able to take a deduction on their tax return of 1.2 million on this project. This is a industrial project, and this is an existing building. I wanted to use that. So the previous one with the multifamily, that was new construction. This was a renovation done in 2023 in New Salem, Pennsylvania. Heavy industrial use. I think it operates 365 days a year. And the company went in and had a great company do some upgrades to the lighting and controls. And we then modeled the building with this new lighting, these new controls in the building, 115,000 square feet. And in doing the modeling, it showed 35% energy modeling, and then we upgraded for the inflation adjustment, so it's 375 a square foot. So 431, 438 was the deduction for this one. I think Billy, you did the site visits for both of these, and
Yes.
there was, this was a pretty open building, and but the lighting, I guess where I was trying to go, the lighting alone really drove this ability for it to qualify for the deduction. You have any thoughts on that?
Yeah, that is correct. And one thing that also plays into it that you mentioned was that this plant operates 24/7. So of course, when you incorporate energy efficiency initiatives, the more hours that it actually operates, the better your outcome is gonna be. But we were able to show that with these lighting upgrades, minimal to no improvements on the other two aspects, HVAC or building envelope, that with this lighting initiative on this 24/7 manufacturing facility, that what we're able to accomplish with an energy model with compared to the baseline, and what can happen there. So a very, very nice success there.
Mm-hmm. So next slide. So this one is interesting because it's one I wanted to illustrate. One is a different type of industry because it's a retail space. So again, we found success in all types of buildings. But this one, we did the energy modeling, and I did do a screenshot of what the output Billy mentioned, and you can see those columns. I know it's kind of redacted and blurred out, but column on the left is the actual, and then I think the column on the right is the ASHRAE standard, I believe. But that's the comparison of those two parts of the building, and then you can't really read, but those are all the areas. So lighting, the heating, those areas that we focus on, mechanical system and the building envelope, showing the comparison between the two. And then again, it's calculating that level of overall building efficiency. And so I'm highlighting this one because this is a 27,000 square feet. It is a retail store in a larger kind of strip mall, if you will, and larger building. But we can model leaseholds as well with this, and you can see the results there. 472 with the adjusted for inflation, and that's 128,384 deduction. This is going to be used with some other projects. The same owner was going to same corporation, same taxpayer, has other locations, so we can isolate this, and it does drive home that even if all the locations have the exact same result, we still have to, under the tax code, review each and every location and where that all goes. So but this is a really good outcome. Even, again, retail and a smaller space, they don't have the load as high as the previous two, but we can still find this level of energy efficiency for that type of building, again, based on its own ASHRAE standard.
Awesome. So we'll open it up for a little bit of Q&A in the last 7 minutes we have here. So we did have a question that came in advance that is a good one that I can kind of ask and then maybe start to field, and then if Billy and Randy have additional thoughts. One of the questions I'm asked sometimes, but got specifically asked for this, was what size building does this start making sense to do on, right? So obviously there are costs associated with hiring an engineering firm and doing the documentation, and potentially maybe cost on meeting prevailing wage, or at least some of the paperwork that goes to documenting that. And so what I'll say is I'm right now working with a client that has a very energy efficient project that likely will be a full 50% or more, because they really have invested heavily in energy efficiency to go kind of as a showcase. And it's 12,500 square feet. And so we're looking at like doing the math of what that qualifies for. And that's right on the edge of where it, whether it saves you money to go through this or not. I mean, it saves you money, but you're there's all, you're pulling forward a deduction that in otherwise would be a 25 years on the value of the building that you're taking year one, and that has some value, but not necessarily, it's not as simple as if I save 14,000, if it costs me $14,000, it saves me $15,000, it might not be quite on that. So what I've seen is, maybe if you can do it really quickly, maybe you're right there about 12,000 square feet, but 15, 20,000 square feet seems to be, if it's above that, the cost of the energy model versus your discount rate typically, I think would be pretty good. I don't know, Randy or Billy, further comments on that question?
Yeah, I tend to agree with you, Caleb. I think with the changes in the Inflation Reduction Act, $5, 5.8, for 5.65 next year, that gets the attention of a lot more building owners, and I think it is worth it, probably around that 20,000 square foot level. Prior to this, we probably had a cutoff right around 50,000 square feet and up, but this incentive is driven by the square footage, unfortunately, and so you can have a super efficient building, but if it's only 3,000 square feet, Caleb, Billy, you've heard me say this before. I don't want my clients to spend $12 to get a $10 tax deduction, because 179D does come with a cost. You have to get the building certified. It's essentially an energy audit, and this modeling and it's required for each building, and so we do need to take that into account. And but again, it's driven by the square footage, and so the more square feet you have, better position you're in. And we typically will have a cutoff right around 25,000 square feet and up.
Yep.
A smaller group, one taxpayer that has multiple locations, and they're kind of in the same area around 10,000 square feet, that we can work with you on that. So we do take it case by case, but in general, about 20,000 is kind of our cutoff.
Got it. So we had a couple questions that have come in. One was talk about the opportunity in parking garages. It's not really a building. So I don't know, Randy, if you want to.
Yeah, in the eyes of the United States tax code and the IRS, it is that parking garage is considered a building because it does have the energy efficiency in it, even though it may not have insulation or heating and cooling. And so it is covered, as well as greenhouses and some other 179D is available in canopies and overhangs. We'll see that sometimes in our multifamily where you may have a canopy, and there's lighting underneath that. We can include that square footage. But yeah, I would say that I would distinguish that two things on the parking garages. It does have to be an above ground structure, or it could be below ground, I guess, actually, but it does have to be, it can't just be the open parking and you have lighting there. And one bigger point, 179D does not apply to the exterior lighting. So if you had exterior parking lot and it's just flat, we can't evaluate that or that lighting. And then even in the parking garage, we are limited to all the covered floors. So you could have a parking structure with, say, 7 to 10 levels, but that open square footage at the very top that's open to the sky, we cannot include it, even though you may have LED lights on that. But anything underneath, as soon as it gets covered, we can cover include that square footage in that. And I think parking garages are a great vehicle for this incentive, because they do, going to my earlier point, they do drive that square footage.
Yeah, and what I was kind of touching on briefly, but maybe makes more sense with the context of understanding the energy efficiency in the 2007 ASHRAE code versus even building code right now. Like if you're building a parking garage right now, it's going to have LED lighting in it, and is going to be, if LED lighting is 56% more efficient than fluorescent lighting or thereabouts, with kind of as a general rule of thumb, your parking garage is going to potentially qualify for that full square footage deduction, which can be pretty significant of a deduction, for what you're doing anyway, potentially.
Looks
Um,
like
Yeah.
you
Yeah,
know, my
go ahead, Bill.
colleague there, Kevin Gallen, has a question, Randy, for you. I don't know if you can see it or not.
I was gonna answer that. Kevin, thanks for the question. All the different types of entities can claim this deduction. This it's an ordinary deduction, so it would flow through with all the other deductions to the members if you're dealing with a flow through or pass through entity, such as an LLC or partnership. They would receive their respective portion of the 179D deduction, along with all the other normal, ordinary, necessary deductions. So no, there's no limitation on that as well. On the 179D deduction. So thank you for asking that. That's a great question.
Okay.
So is there another one?
I don't see any right now. We are right up against the time. Anybody have a question they want to ask live or in the chat before we close out here? I will say, thank you very much, Randy and Billy, for your time today. And thank you to everybody who attended. We will, as I mentioned, get this out to everybody as a follow-up for some of the nuance that you might be looking at. But thank you so much.